Thank you guys for showing up today. It's a pleasure to see you guys. We know that you guys took our work or whatever you had going on to be here. Today is an important day to discuss important topics about why we're here as Realtists. Oftentimes people don't understand why we are Realtists and what we're doing for the community and how we have a great impact as it relates to homeownership, particularly in the minority communities. Oftentimes we're not even aware of how we're impacted and the things that are taking place on the back end, behind the scenes. So our role as Realtists is to promote a positive impact for the community so that we can get the proper housing and fair housing for us. Now, one thing we do in the community that helps us is build Black wealth through homeownership. Homeownership is important. It provides stability for the communities. Time after time after time, we see people just renting as serial renters, paying high cost of living, and the cost of rent keeps going up. So oftentimes people are not aware of the importance of life skills to build better credit early in life, how to money manage, how to build stable housing, and financial issues that cause us not to be able to live according to what we would like to live. A nice place to live, comfortable, clean place is more important than anything. Oftentimes people are not going to get their dream house, but our goal is to promote housing stability, building wealth through homeownership, whether you're doing it as an investment, whether you're doing it as your primary residence. We want our communities to see the importance of having a house that allows for them to be stable. We provide innovative real estate solutions for underserved communities. We talk about using data tools and things that are necessary to help us to keep track of the things such as the Shiva report that I'm going to go over. It's so much material out there, but we oftentimes miss that material because we're not knowledgeable about it. It's not promoted. It's not that we don't want fair housing for all communities, but there are certain communities that have been impacted and not been able to get what they deserve. Each one teach one. First and foremost, we have to put in the work. If we don't put in the work, we are not aware of what we need to be doing. And oftentimes we get left and fall back by the wayside because we're not putting in the work. When we arise above the things that we have been able to overcome, we want to bring others with us. By doing that, we promote the things we've learned. Each one teach one. The role of Realtists in policy advocacy and community empowerment is to educate on how local, state, and federal policies impact Black homeownership. Encourage Realtists to engage with elected officials to try to help them to understand where we stand and how we can allow our communities to succeed by giving them the proper housing and stability.
One of the biggest governing bodies over mortgage lending is called the CFPB, our Consumer Financial Protection Bureau, CFPB. They were developed in 2011 after the market crashed. And so, long story short, they came out with a whole lot of rules to try to keep the real estate market fair for everybody. And everything has gone smooth since 2011. We haven't had any more market crashes like the 2008, 2009 time because of these guardrails that we've been under. But because of where we are federally, they're trying to do away with this particular agency. And it's barely hanging on by a thread right now, only because of a court order that told them that they cannot get rid of it completely just yet. But they have gotten rid of a lot of employees that would normally go out and investigate wrongdoing by others, particularly big banks or big entities. Because if we get rid of the CFPB, the major players like your Bank of Americas and Rocket Mortgage, they gonna pretty much take over everything, and it's gonna be hard for the small players to get involved, because right now, as a mortgage lender, I can't give you gifts directly. I'm supposed to open up an environment, invite everybody, and then I can reward you. At least now we got to jump over a fence. If they get rid of the CFPB, there is no fence. And there are certain entities already getting prepared to where they are buying up a lot of things as far as different segments of the real estate process, from the websites to real estate offices to companies that service loans. They're trying to make it an all one-stop shop. And it's going to be hard for small businesses to compete with them without the guardrails of the CFPB. And man, I know some of you are multi-state realtors. If we get rid of the CFPB, they're national, so we're all under national guidelines. But if they get rid of the CFPB, it'll be ran by the state. So you got to go by what you're licensed. That's going to be a headache for mortgage lenders for sure. If a mortgage lender is licensed in 7 different states, they got to learn 7 different rules. Mm-hmm. So if you are a multi-state realtor, that's going to affect you too. So everything that happened to us as mortgage lenders is also going to have an effect on what you all do. By staying up to date with what's going on with current events. And if you ever hear something about the CFPB, your ears should perk up. And you need to stop what you're doing and find out what's going on, because I guarantee you it affects all of us in the real estate business.
Dennis Barnes have been a member of NAREB, 5-6 years, and has been the treasurer since that time. And I think most of our members, if not all of our members, are realtors or different real estate professionals who enjoy helping people. They love assisting people. And NAREB actually gives us an opportunity to get training, get information to further that goal. And several of us have been around a couple of decades in the real estate industry. So there are changes coming. There's always been changes. There was the market crash in 2008, 2009. Actually, even last year, after a NAR settlement, there were several changes to our industry. But with the tools we get from NAR, with the training and education that we seek, we'll be able to continue to help these people. Again, there's been potholes, hurdles to climb, but we'll continue to get educated. And because we all have a zeal to help people, we'll still be able to, going forward, assist these people with the goal of home ownership. Thank you.
Good morning. My name is LaTarsha Shine, and I am the CEO and broker of We Shine Realty Experts, where we have helped thousands of people transform their lives and their bank accounts through real estate. And it is such a great day to be a Realtist. And one of the reasons why I joined this organization is because I understand the importance of home ownership, and not only that, but home ownership in the Black community, so we can shorten or make this wealth gap smaller just through something as simple as home ownership. Because historically, people have no problem paying for where they stay and where a roof is over their head. However, what some people in the Black community has had a problem with is actually being able to amass wealth that way. And so one of the main reasons I believe that there is definitely a wealth gap in Black home ownership, it's not because, and I want you to just think about it, like, what is the main reason? I don't think it's because of credit. I don't think it's because people don't have money. I think it's really because of a lack of education. And so for us to be a part of Realtists and this initiative of helping people with home ownership, it's really more about education. And so when I heard about Realtist, I actually heard about it. One of the first people, and I don't even know if Dennis remembers, but he was one of the first people many years ago to mention something about Realtists, and then I had another realtor friend over in Memphis that told me a little bit about it. And when I had the opportunity to join, and not only that, to be a part of the leadership team, I said this is something that is definitely ordained, and it's something that needs to happen. And I just want to help create the awareness even for the Central Alabama chapter, so we can help even more people in our community to get home ownership. Not only that, but to amass wealth with it. Thank you.
Tell me about it.
I knew you probably did. You're the first person who said it.
Did you want to talk about how you initially got interested in it for the investment part?
Not this time.
I
gotta get back.
Okay.
So, as mentioned earlier, the Sheba report provides the details about how our community has been impacted. And this report here is from 2024, talks about what took place in 2023, which it hasn't been that long ago, since it's basically April of 2025. It did bring out some important points I'd like to mention here on this report. As you notice, it talks about a 30-year mortgage peaks at 7.79% in November 2023. I've been in real estate for 20-some years, and I bought property 20-some years ago. I started buying property at 22, age of 22, and back then, our rates was about 6%, even then. When the rates dropped to 2 or 3%, that wasn't something that was well known, and it was something that was a popular thing. So everybody thinking they're gonna go back to 2 or 3%. Unfortunately, it ain't gonna happen no time soon. But when it do, I'm definitely gonna try to make sure I benefit from that when that time comes.
Right.
It talks about here, as of November of 2023, before filing through the end of the year, by May of 2024, the rates had begun bounce above 7%, adding pressure to an already struggling housing market. This impacted all of us real estate agents, mortgage brokers, or anybody in the real estate industry at hand, and investors. However, this is one key point that's brought out. In September 2024, the 30-year fixed rate mortgage hit a 2-year low approaching 6%, but that has not been enough jumpstart for the housing market. A dramatic, unexpected fall inflation of later part of 2023 suggests that the housing market might finally be entering a long-awaited recovery this year. Well, unfortunately, residential investment fell in the second and third quarters of this year. Black homeownership. In 2023, the homeownership rate among Blacks households stood about only 4.75%, far below the 74.3% among white households. As minorities, this current rate of homeownership is significantly lower than the peak level achieved in 2004, when it surpassed 49%. So that lets us know that only 45% of households in a community have ownership of housing. Despite the gradual increase in the number of Black homeowners since 1968, Fair Housing Act was implemented, the gap in homeownership rates between Blacks and white families are wider now than they have ever been in 50 years ago. What that's telling us, obviously there's an income issue. There's an income issue, number one. Education is important, but we got to get past just looking at 4 or 5 or 10-year degrees. There's ways to make money and also implement those skills, life skills that you can utilize early on so that you can be able to do some things and get proper housing early. That's another topic of discussion, but I want to bring that out because oftentimes people are being left behind with large amount of student loan debt. 100,000 student loan debt with only an associate's degree or a bachelor's degree and not even making $50,000 a year. That's a problem there. That is a big problem. And I see it all the time because we have a credit company, and when we're doing credit repair and we're looking at people's credit reports, we can see 100, 160,000, 200,000, and I'm like, how much you making per year? 40-some thousand, 50,000 a year. Now, mind you, they may not ever pay back that student loan debt, but it impacts them from becoming a homeowner, the amount they can qualify for. It impacts the value they can get as far as what they can get, as far as the type of loan, the mortgage type rates they can get, as far as the rates not itself, but like the total overall debt to income ratio is impacted, especially when you're not making that much, because they oftentimes have car loans, personal loans, and credit card debt. That impacts everything as a whole. Being financially educated is an urgent need for the community. The wages, there's an issue with the wage gap, as mentioned earlier. And like I said, surging housing prices have continued to Gloucester increase in homeownership equity stood approximately $298,000 per borrower by the close of 2023. So the significant increase in housing equity last year, combined with a higher rate of homeownership rate and the higher average home prices for white families compared to black families, further increases has a lot to do with the appraisals. Oftentimes with minority communities, the appraised value is less. It's shunned upon. Said, oh, that side of the town, the value is not there. It doesn't mean the community is less, doesn't mean we're less. The value is there, but we're not getting the value because of not being fair. And that's just the truth. Oftentimes, people have to hide the pictures on the wall when you go into a property for showing by removing pictures so they do not know who the owner is. Because if it's a black owner, it may not get sold as fast. We dealt with that, one of our listings last year. One of my agents had a listing that the owner decides to put up white pictures of families to get the house sold. And they decide they want to use a white agent. Mind you, I love all people, babe. I'm probably got mixed with so many things I don't even know. What I'm saying is, it's not being done fair. Fair is fair. I'm not against anybody, no matter what race you're in. We have to work with these people. We have to love people. That's what I go by. I live based on love. But what I'm saying, the unfairness is definitely there. So with that being said, the Sheba report is a long report, which we're not going to go over, but it definitely gives details of what is happening with the housing community. So if you have time, please make sure you research the Sheba report and have a great day.